Right now, at this very moment, if you have $20,000 in cash sitting anywhere in Canada, whether it is tucked inside your home, locked in a safe, stored in a safety deposit box, or sitting inside your own bank account, a brand new federal law that just came into force weeks ago could freeze every dollar of it, file a government report against your name, and silently cut off your CPP, your OAS, and your GIS payments. Not because you broke the law, not because you are a criminal, not because you did a single thing wrong, but simply because you had cash and you did not know the new rules. Millions of Canadians are walking straight into this right now without any warning. What you are about to hear in the next few minutes could be the single most important financial update you receive in all of 2026. Stay with me. Do not move, because this affects you directly. This is Global Updates 24, and this is a breaking financial news alert for every Canadian holding a bank account in 2026. Welcome. If you are new to this channel, please subscribe right now and tap the bell icon so you never miss a critical update like this one. If this report gives you information that protects your money or your benefits, press the like button. It costs you nothing and it helps us reach thousands more Canadians who need this warning just as badly as you do. And please, the moment this video ends, share it. On WhatsApp, on Facebook, in a text message, with every parent, grandparent, neighbor, or friend you know who depends on a government pension. You could be the reason someone keeps their money safe this year. Now let us get into the full story, because every second matters. On March 26, 2026, just weeks ago as of this recording, the Canadian federal government quietly signed a sweeping new piece of legislation into law. It is called Bill C-12, officially named the Strengthening Canada's Immigration System and Borders Act. When the headlines broke, virtually every major news outlet in the country focused on the immigration provisions inside that bill. And as a result, something profoundly important was buried, overlooked, and left unreported to the Canadian public. Because hidden deep inside Bill C-12 is a complete and total overhaul of Canada's Proceeds of Crime, Money Laundering, and Terrorist Financing Act. The law that governs exactly how your bank monitors, flags, and reports your cash transactions to the federal government. This is not a minor adjustment. This is not a technical amendment. This is the most sweeping and aggressive rewrite of Canada's financial surveillance framework in the country's modern history. And if you are a Canadian senior receiving CPP, OAS, or GIS, or if you are anyone in this country who holds a bank account and handles cash, this law now changes your reality in ways you cannot afford to ignore. Here is what changed in plain language and why it matters to you personally. Until this law passed, the largest single fine that FINTRAC, Canada's Financial Transactions and Reports Analysis Centre, had ever imposed on a Canadian bank for failing to properly report suspicious transactions was under $10 million. That was the ceiling. Banks took their compliance obligations seriously, but there was a degree of tolerance built into the system, a degree of calculated risk. Some transactions were reviewed slowly. Some reports were delayed. Some borderline cases were quietly set aside. That era ended the moment Bill C-12 received royal assent. Under the new 2026 penalty structure, a single prescribed violation can now cost an individual up to $4 million. For a financial institution, a bank, a credit union, an insurance company, a mortgage broker, a single violation now carries a penalty of up to $20 million. And when multiple violations are stacked together, as they routinely are in compliance investigations, the total penalty cap rises to $20 million or 3% of the institution's entire global annual revenue, whichever figure is larger. Let that sink in for a moment. Royal Bank of Canada alone reported over $54 billion in total revenue in its most recent fiscal year. 3% of that figure is over $1.6 billion. That is not a fine. That is an existential threat to a financial institution, and every single bank operating in Canada right now is acutely aware of it. What that means for you is this. Every Canadian bank has, since this law passed, upgraded its transaction monitoring software, retrained its compliance staff, and reset its internal reporting thresholds. The unwritten instruction flowing from every legal and compliance department in every financial institution across this country is now the same. When in doubt, report it. The cost of overlooking something that looks suspicious is now potentially catastrophic. The cost of filing a report on an innocent customer is zero. No bank in Canada is going to choose their customers' convenience over their own institutional survival. Not in 2026, not under these penalties. And that decision, made in boardrooms you will never enter, now directly affects what happens the next time you walk into a branch with cash in your hand. Beyond the penalties, Bill C-12 also dramatically expanded FINTRAC's supervisory authority. Every financial institution operating in Canada, banks, credit unions, insurance companies, mortgage brokers, money service businesses, must now formally register with FINTRAC and renew that registration on a regular, ongoing basis. The agency's reach has never been broader. Its systems have never been more powerful, and the surveillance net it casts over Canadian financial transactions has never been tighter than it is right now, today, in April 2026. Now let us talk about the specific rules that govern your cash, rules that existed before Bill C-12, but whose consequences just became dramatically more serious. The first rule is the one most Canadians have at least heard of. Any single cash transaction of $10,000 or more, whether you are depositing it, withdrawing it, or exchanging it, triggers an automatic large cash transaction report filed directly with FINTRAC within 15 calendar days. Your bank does not notify you that this is happening. They do not ask for your permission. They do not warn you first. The report is filed automatically, without exception, every single time that threshold is crossed. That has not changed. What has changed is the severity of consequences for any bank that fails to file it. The second rule is the one that catches ordinary, well-intentioned Canadians completely off guard, and it is called the 24-hour aggregation rule. If you make 2 or more separate cash transactions within a single 24-hour window, and those transactions together total $10,000 or more, FINTRAC's system treats the entire combined amount as one single large transaction, and a report is filed automatically. 2 deposits of $5,500 on the same day equal $11,000 in FINTRAC's system. There are no exceptions to this. There is no appeal. The system catches it, the report is filed, and the review process begins, whether you intended that or not. The third rule is one that could turn an honest Canadian's good intentions into a federal criminal matter. It is called structuring. Many people believe, incorrectly and dangerously, that they can avoid triggering a report by simply keeping their transactions just below $10,000. They withdraw $9,800. They deposit $9,500. They do it a few times in a row and feel confident no report was ever filed. What they do not realize is that deliberately breaking up financial transactions to stay below the reporting threshold is itself a federal criminal offense under Canadian law. It does not matter that every single dollar is completely legitimate. It does not matter that the money came from your pension, your savings, or your life's work. The act of structuring, intentional division of transactions to avoid reporting, is illegal. Full stop. And under the new 2026 enforcement environment, banks are now equipped with algorithmic detection systems specifically designed to identify structuring patterns. Repeated withdrawals or deposits of $9,500 or $9,800 at regular intervals will trigger an immediate review, and not a single compliance officer working under the new Bill C-12 penalty structure will look the other way. The fourth rule is one that almost no Canadian senior is aware of yet, and it is changing right now in real time. Under the new 2026 framework, banks across Canada are actively moving toward prohibiting third-party cash deposits entirely. That means if your son or daughter or caregiver walks into a bank branch and attempts to deposit cash into your account on your behalf, the bank may refuse to accept it outright, and may file a report flagging that the attempt was made. For millions of seniors who have relied on family members to assist with banking tasks, this represents a fundamental and largely unannounced shift in how Canadian banking works. So let us now get to the question that brought you to this video. What actually happens if you have $20,000 in cash right now in April 2026? The answer begins with something important. Holding cash is not illegal in Canada. You have the legal right to hold $20,000, $50,000, or $100,000 in physical Canadian currency in your home, your safe, or a safety deposit box. That is your right as a Canadian, and it has not changed. But the moment you attempt to deposit that money into a bank account in 2026, you will encounter a compliance environment that is more aggressive, more automated, and more unforgiving than anything that has existed in this country before. And your bank, now operating under the threat of billion-dollar penalties, will always place its regulatory obligations before your personal convenience. Let me show you exactly what this looks like in the lives of real Canadian seniors. Francis is 71 years old. a retired dental office administrator from London, Ontario. She receives CPP of $1,040 per month and full OAS of $743. For 3 years, she quietly set aside $300 to $400 each month from her pension, cash saved in a tin box in her closet that she intended to give her 3 grandchildren as graduation gifts. By March of this year, she had accumulated $14,000. When her eldest granddaughter graduated in April, Frances walked into her bank on a Tuesday morning with the cash and asked the teller to process a deposit. Within minutes, the teller called the branch manager. Frances's account was flagged under FINTRAC's reporting requirements and placed on an immediate temporary hold. A formal compliance letter arrived at her home asking her to document and explain the full origin of those funds within 7 business days. Frances had kept no records, no dated withdrawal receipts, no written log of how she had set that money aside over 36 months. What followed were 4 exhausting days of phone calls, paperwork, and rising anxiety before she was even able to speak to a compliance officer directly. 9 full business days passed before the hold was finally lifted and her deposit cleared. Every dollar was legitimate. She had committed no crime. She had done nothing wrong. And yet her words afterward, "Stay with you." If someone had simply told me to keep a basic notebook, I would have saved myself weeks of stress. Nobody warned me. That is precisely why this report exists today. Now consider Thomas, 77 years old. He receives full OAS at the enhanced rate of $817.36 per month, the higher amount available to seniors aged 75 and older, alongside CPP of approximately $860 and GIS of $890, bringing his total monthly federal income to approximately $2,567. When his wife passed away in January 2026, Thomas inherited $28,000 from a credit union account she had maintained separately throughout their marriage. After the estate was legally settled in March, he transferred those funds into his primary checking account. The credit union, noting the unusually large transfer relative to his account history, voluntarily filed a suspicious transaction report. But Thomas's estate lawyer had given him one specific piece of advice months earlier. Keep every document in a single organized folder: the will, the estate certificate, the lawyer's formal letter confirming the source of the transfer. When his bank's compliance department contacted him, Thomas produced that folder immediately. The review was completed in 3 business days. His account was never frozen. His CPP, his OAS, and his GIS continued without a single interruption. 2 seniors, 2 large sums of money. 2 completely different experiences, and the only difference between them was preparation. Now let us cover your exact April 2026 benefit amounts, because knowing precisely what you are entitled to is part of protecting it. The Canada Pension Plan received a 2% cost of living adjustment at the start of January 2026, and those rates remain in effect through the end of the year. The maximum CPP retirement pension for someone who began collecting at age 65 is $1,575 per month. The national average CPP payment for new beneficiaries in the April through June 2026 quarter is $925.35 per month. If you delayed collecting your CPP past age 65, your monthly amount increases by 0.7% for every month you waited, up to a maximum enhancement of 42% if you deferred to age 70. Old age security was adjusted upward by 0.1% in the April 2026 quarterly indexation review, bringing the cumulative annual increase to 2.1% compared to April 2025. The maximum OAS for seniors aged 65 to 74 is $743.50 per month. For seniors aged 75 and older, that figure rises to $817.36 per month, reflecting the permanent 10% enhancement that came into effect in July 2022 to acknowledge the greater financial pressures faced by older Canadians. OAS is fully indexed to the Consumer Price Index and can only ever increase or remain unchanged. It is never reduced. However, if your net annual income in 2026 exceeds $95,323, your OAS begins to be clawed back at 15 cents for every dollar above that threshold. The guaranteed income supplement for a single Canadian senior currently reaches up to $1,098 per month, GIS is entirely non-taxable and is excluded from the OAS clawback calculation. A senior receiving CPP at the average rate, full OAS, and the maximum GIS can collect close to $3,000 per month in combined federal income support. Every dollar of that is money you have earned, and protecting it requires taking specific, deliberate action, particularly before April 30th, 2026. Your GIS eligibility and payment amount for the July 2026 cycle is calculated directly from your 2025 income tax return. If you have not filed yet, file today, not tomorrow, today. File even if you earned nothing. File even if you owe nothing. File because your July GIS check depends entirely on it. Call the Canada Revenue Agency at 1-800-959-8281 or find a free senior tax filing clinic through the Community Volunteer Income Tax Program at canada.ca. Many of those clinics are running right now specifically to help seniors with modest incomes file at no cost whatsoever. Here is your complete protection plan. 8 clear, practical steps that every Canadian needs to take right now. Know the $10,000 threshold and respect it completely. Any single cash transaction of that amount or more is automatically reported to FINTRAC without exception. Any combination of cash transactions within a 24-hour window that reaches that total triggers the same report. Understand these boundaries and plan your banking honestly, never with any intention of avoiding a report. Never deliberately split your deposits or withdrawals to stay below that threshold. That is called structuring, and it is a federal criminal offense regardless of whether every dollar you have is completely legitimate. If you have a large amount to deposit it in one transaction and be ready to explain its origin clearly. Starting today, keep a simple cash log. It does not need to be formal or complicated. A basic notebook will do. Every time you set aside cash, write down the date, the amount, and where it came from. Your pension, your OAS, a family gift, the sale of a vehicle. A consistent handwritten record kept over months and years can be the single most powerful document you ever hand to a bank compliance officer, and it costs you nothing to maintain. Before making any large cash deposit, organize your supporting documents in advance: a will or estate certificate for inherited funds, a signed sale agreement for property or vehicle proceeds, printed bank withdrawal records that trace the accumulation of saved cash over time. Place everything in one folder before you go anywhere near a branch. And then, before you walk through that door, make one phone call. Contact your bank branch directly and tell them, I am planning to deposit approximately this amount in cash on this date from this source, and I have documentation ready. That single proactive call signals transparency and good faith to the compliance system, and it routinely reduces a potential 2-week account review down to 2 or 3 business days. Banks treat customers who communicate openly in an entirely different way from unexpected large cash arrivals at the teller window. Make absolutely certain your direct deposit information on file with Service Canada is current and accurate. Log into your My Service Canada account at canada.ca or call 1-800-277-9914. A mismatch between your registered banking details and your actual account can delay or return your CPP, OAS, and GIS payments. And this risk is especially significant during the July recalculation period when millions of accounts are being updated at the same time. Finally, protect yourself from the financial predators who specifically target Canadian seniors. The Canada Revenue Agency will never call you to demand cash. The RCMP will never contact you requesting gift cards. Canada Border Services will never threaten you with immediate arrest over the telephone. If anyone, by phone, by email, or in person, tells you otherwise, stop the conversation immediately, contact someone you trust, and report the incident to the Canadian Anti-Fraud Centre at 1-888-495-8501. Irene, a 69-year-old senior from Saskatoon, was nearly defrauded out of $11,000 through exactly this type of phone scam in February 2026. She was trembling at the teller window when a bank employee noticed something was wrong, stepped in, and saved every dollar she had. The same compliance systems that may feel like an inconvenience when you are depositing your honest savings are the very systems that stand between seniors like Irene and the people who are actively trying to steal from them. Here is the unvarnished truth about where Canada stands right now. April 2026 is the most intensively monitored cash banking environment this country has ever operated in. Bill C-12 is law. The penalties are real. The surveillance systems are active. The compliance culture inside every Canadian financial institution has been permanently reset, and the benefit amounts available to Canadian seniors, CPP reaching up to $1,575, OAS up to $817, GIS up to $1,098, are the highest federal retirement support figures in this country's history. You paid into this system for decades. That money is yours. And keeping it yours requires nothing more than the steps we have walked through today, steps that ask almost nothing of your time and cost you absolutely nothing. But that could protect you from weeks of frozen accounts, compliance investigations, and the kind of financial disruption that no Canadian senior should ever have to face. Please press the like button right now if this report gave you something valuable. Share this video immediately, on Facebook, on WhatsApp, in a text message, with every parent, grandparent, and friend you know who depends on a pension or keeps cash at home. Subscribe to Global Updates 24 if you are not already part of our community. We cover the financial news that actually changes lives for real Canadians every single week. Tap the bell so you are always first to receive our alerts. Drop your city and province in the comments below. We read everyone, and we want to know how far across this country our community reaches. And if you have a question, a situation, or a topic you want us to investigate and report on, leave it in the comments. Nothing goes unread. This has been a Global Updates 24 breaking financial news report. Until next time, stay informed, stay protected, and never let anyone take a single dollar of what you have rightfully earned. We will see you in the next one.